देखते हैं आज के हमारे पहले भाई कौन से कैसे हो रोहन भाई। बढ़िया क्या है, बट थोड़ा मूड ऑफ है अभी। मूड ऑफ क्यों है? क्योंकि हम न्यूज़ में चाह रहे थे बड़ी कैंडल बन जाए अपनी तरफ या फिर अपने एसएल की तरफ बन जाए, बनी नहीं वो। बहुत सारे लोग डिसअपॉइंट हो गए, मैं भी डिसअपॉइंट हो गया। गोल्ड में करेंगे अगली बार 88333। कौन कौन सोच रहा था, चलो एक बार आप ही बताओ यार। मैं तो सोच ही रहा था, आप में से कौन कौन सोच रहा था कि आज तो राजा ही बन जाएंगे बस। आज तो बस ये बंदा न्यूज़ में रॉकेट ही करवा देगा, राजा बन जाएंगे। कोई नहीं भाई, अगर अगला ब्रेकआउट होगा तो लॉन्ग कर लेना भाई, वो भी बहुत अच्छा जाएगा। मैं तो सिंपल ये वाले एसएल के साथ बैठा हूँ, ये मान के चल रहा हूँ कि मेरा न्यूज़ में एसएल जा चुका है। ऑलरेडी मेरा लॉस हो चुका है न्यूज़ में। अब टीपी आ जाए तो बहुत बढ़िया, 1:2 निकल जाएगा मेरा मोटा मोटा, बढ़िया हो जाएगा अपना। डीप चैट में क्या 12 बजे गुड में करो। समझा नहीं पांडे जी। अजीज भाई, अजीज भैया लास्ट 10 दिन में तो विन नहीं करा ना आपने, ये फर्स्ट विन है भाई जी का। वो स्पोर्ट्स बाइक ऑर्डर करती थी, कैंसिल कर दो फटाफट, कैंसिल कर दो, इससे पहले वो रिफंड ना करें। यहाँ सभी आए। अरे भाई, पर मैं आपको ना गोल्ड में करवाता हूँ यार। गोल्ड में देखना मैं कैसे कैसे आपको चांद में ले जाऊंगा गोल्ड में। अख्तर भाई, अच्छा अख्तर भाई, मैंने आपका आज ही भेजा था और आपको मिल जाएगा। मैंने आज 29, आप देख सकते हो 29 अक्टूबर, मैंने इस लिस्ट में आपका भी डाल दिया, स्क्रीनशॉट भी दिखा दिया आपको प्रूफ में कि भेज चुका हूँ भाई। अब टाल नहीं रहा, भेज चुका। अजीज भाई आपका भेज चुका हूँ, अगला पिक कर लेते हैं। धीरे 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 ऊपर चला जाए। इस वाले डब्बे का रीटेस्ट करने आया था नीचे, बट इसका रीटेस्ट करके यहीं से जाना चाहिए था वापस आया, अब चला जाए। सेकंड ब्रेकआउट मेरे हिसाब से कंटिन्यूशन आना चाहिए, अच्छा कंटिन्यूशन आना चाहिए। ये सेकंड ब्रेकआउट इस पीवाई का मिलेगा। आप इसको हायर टाइम फ्रेम में चेक करोगे, आपको यहाँ पे पीवाई मिलेगी, यहाँ से कंटिन्यूशन एटलीस्ट यहाँ तक दिखा देगा। मार्केट अच्छा है भाई, मैंने पॉली मार्केट में 50 नहीं लगाया भाई, मैं लगाने वाला था 50 उस पर भी। आपको पता है मैं किस चीज़ पे लगाता। हो गए चलो 10 दिन, अगला पिक कर लेते हैं। सोच रहा था कि पॉली मार्केट पे एक बार लगा दिया जाए, शायद रेट कट अगर नहीं हुआ तो तूफान आ जाएगा मार्केट में, पैसा बन जाएगा अपना। मैं इसको हटाता हूँ, स्टीपी को हटाओ। एक टीपी मैं बस यहीं पे लगा रहा हूँ, छोटा वाला 75% यहाँ पर, पूरा वाला यहाँ पे ऊपर तक लगेगा, ये वाले पीवाई तक लगा देते। मोटा मोटा यहाँ पे मिल जाएगा अपने को 1000 पॉइंट।
Very next 2 days later, it's breaking. Well, the problem is they had that announcement with AMD.
Yeah.
That gave it some juice. They're back on some sort of a quantum AMD breakout or whatever. They just solved world hunger. But yeah, this is the move that we're talking about. So it was all the way down into there. That was real, down into 260. Then the very next day it was back to 285, or that same day, back to 285. And the very next day up to 310, sort of where we are right now. And that's IBM's sort of earnings in a nutshell there. And very similarly, although GDP is coming back, down into these levels again. The GV had a very, very similar sort of wick moment that actually printed down there to 530, and then the very next day or whatever, it went right back up to almost 630, 620 or so, and now it's actually down quite nicely. GEV actually about to break lower. So this is actually one where I want to buy this one, but I do not want to catch a falling knife. This is a buy in and around 500. So we'll watch out for GEV. But you play those games, and that's sometimes what winds up happening, right? I mean, they are stocks where you're looking for big winners, and then you also sometimes have to take it on the chin just a little bit. But
it's the first pullback. Like it went 6x from the split, like when they split three ways, GE. So like it's a bit it was a bit frothy. First real pullback. I think you got to work back into that one. Which I'm going to. I'm definitely going to buy some dips there. David with his silly trade idea. Thank you, David, for the super chat. Always a silly trade idea for anyone tuning in for the first time. David, the regular viewer, usually he just says it's a silly idea, and some of them usually are actually usually like. Tesla, quantums, Qs lose ground. Even Google may close lower. Okay, well, if the market ends up being weak, I don't think there's any surprise that the quantum names could take it on the chin. Alphabet, I'd be surprised if Alphabet gave it all up. But the quantums, that was a gorgeous trend break. I'm just going to use Rigetti here. Like, let's be real, they've already made a significant pullback. I feel like there's more room to a bounce on the daily than there is to the highs. I'm speculating that you're holding like Rigetti here around 29 and the 50 period for a hot minute, but that does give you some room to fall. It's not like they've had really good days in here. And when you see patterns like this, it doesn't matter what we think about selling in Rigetti. It's happening, and it's happening at $42. Right? Like somebody is selling this stock at $42 and it's under 42, so you bet on continuation until it breaks that back out. That's how these shorts work. They kind of tip their hand because it's hard to, when you sit there for like the same price 4 days in a row and you're failing the same area, you have an idea of what the shorties are doing. You can't really hide it in that circumstance. So until you break that out, you got to hunt for a new bottom. So I'm kind of with you on that one, David. Alphabet, I don't know if I can get on board with that. I kind of think that's a strong one today.
Yeah, so we had a keystroke error right there, and we just put the wrong stop in, so we got punched out, and then by the time I had to regroup the trade, it was about 10 or 15 cents lower, so we're still short, but we had to punch shorter on that, so now we're starting to come in just a little bit right here. We can have a quick little look at the dollar as well, just to see what that is doing here, because it doesn't look like the market wants. Literally, the NASDAQ is down 0.1 right now, so if we go into a 1 minute chart here, okay, the dollar slightly ticking up right now, like 10 basis points, like just almost nothing there from 98.70 to 98.80. So not much happening again here in the market and with the dollar. So unfortunately, we can look at TLT, see if the treasuries, okay, so they're actually starting to head downside a little bit now. So that, again, here's the 20-year going lower, makes sense. As rates go lower, so does the 20-year. So there it goes again. Just surprised that all this stuff isn't priced in already, whoosh. So I guess next time, maybe we'll make this note for whatever, December 18th, whatever the next cut date is, that we can maybe short the TLT, because if we know it's going to be that kind of movement on an expected rate, this is something that we could easily get on board with, and it's only 20 cents down. Part of that might be the descents as well, because, adding to a little bit of uncertainty, so I could see something happening around there. I'm going to put another bid here, low 90. Am I already there? No, I'm low 80s. I'm going to put a bid like mid 90s, see if we can get at another 10% here. The future's not doing anything, but good news, guys. We are 4 minutes away from Q&A time, and that will hopefully spark a little bit of magic here, mystical, magical. What's up, Adara?
Yeah, just a reminder here, as Sean mentioned, we're about 4 minutes away now from the FOMC press conference with Fed Chair Jerome Powell. Now, how this works is they'll release the prepared statement on the Federal Reserve website. I'll read through that for you guys, and I'll let you know if there's anything specifically of note that is being said in that statement. Then as we get to the end of that statement during the press conference, I'll let you guys know that the Q&A is about to begin. Once the Q&A begins, I'll keep you guys posted, and keep an eye here at the bottom of the screen. If there's any headlines of note, I'll put them up there, but I'll also be interjecting throughout the conference to give you guys the goods as to what is happening here with Fed Chair Jerome Powell's press conference. Another interesting thing I want to mention is Perhaps not shockingly, there's actually Kalshi action on the Fed conference. So apparently there's a 72% chance people are thinking he's going to mention goods inflation, 67% chance people think that credit might be mentioned. AI, there's about 58% chance. I only bring this up to get a sense of what people are looking for him to say. We'll have to wait and see, of course, if any of those things are said. But either way, worth noting, people are literally betting on the commentary coming out of this conference, guys. Back to you.
Okay, well, yeah, you have Kalshi up right now. I have it up too. I still have it up.
Yeah, I want those look fun. I want to have some of those up.
Yeah, did you find anything yet?
I was able to. I have it up.
Okay, go ahead. Yeah,
we can show Kalshi. Yeah, market's not doing anything too crazy. We can come back to it. So globally say during the press conference, and then you have December. Obviously, Powell out of. I mean, come on. Obviously,
will you say credit or median?
Where do you see that?
I want to see both of them. Top left.
Oh, this one here, credit or median. Yeah.
A decision in November. Yeah.
I just.
Wow.
AI or food.
AI. Okay, so what will you say AI? That's only 59%. Oh, this is just in his speech or
things in the speech.
Press conference? No.
Pandemic.
What do you mean? Where does it say in the speech?
It says, what will he say during the October press conference?
Of course he's going to say AI.
Yeah. Well, like, wait.
Why is that only 59%?
That's 59. I'm not telling anybody. We're not telling anybody to go hop on Kalshi and take this. I don't even have an account. Right?
He's not going to say the word pardon?
Pardon?
Beige book, no. Volatility, yes.
QT.
Yes, for sure, volatility. That's why that's only 36.
Well, QT needs to be there because he's more likely to.
Go down. These are the ones that are it's consumer confidence. Gold. Yes, he's definitely going to say that. Is he going to say? Someone's going to ask him about gold. I would bet yes on all of these, but I'm a gambler, so I mean I don't.
Tariff inflation is 25%. But does he have to say those exact words, or can he kind of say that?
No, exact words.
I mean, come on.
You gotta pay 30%.
My whole thing is, if odds seem too good on something, usually you're a sucker. Like, let's be real. Kalshi's pretty good at this.
Maybe he doesn't normally. Normally.
That's the first time I've looked at that. That's just how interesting. You can tell. It's always fun to look at stuff like that, but
that's the problem with names like DraftKings and all that, is because like they don't have stuff like that, and Kalshi and Polymarket do, and you just heard me say, like, I like the action, obviously. Hello, my name is Sean, I sit here, but I think that's great. And like yesterday, in the Jays game, I parlayed Ernie Clement hit, Addison Barger hit, Bichette hit. That's a plus 400 parlay right there, and it hit. So right there, we got 4-1, and we're just playing around yesterday. So we like that. Maybe the Jays do something again today. But I was feeling a big nice win yesterday. So we had that, man. We had that plus 400. That's a good one there. But
just quickly, this CMBM has opened twice and halted higher twice again. I have no idea why. I can't figure out. It's 15 cents. Why is it halting on a 15-cent move as a $3? Like it's barely even moving. Like, anyways, it doesn't really matter. From gap to gap, this will continue to go higher. But it's a halt fest. Despite being 375 million shares, it just continues to halt higher and higher. I'm going to reload IBIT as we get back a little bit to the top. But let's go over to the desk with Adair.
Chair Powell here. We're going to take a moment to thank our friends. Sorry about that. As we wait, Chair Powell, we're going to take a moment to thank our friends at Origenics. Each year, 3.8 million concussions are reported in the U.S., but there's still no FDA-approved treatment. NYSE-listed Origenics OGEN is changing that with its first-in-class intranasal drug designed for rapid brain access, with the concussion treatment market projected to reach $8.9 billion. By 2027. Origenics is uniquely positioned to lead the way. Learn more and schedule a meeting today. Fed Chair Jerome Powell, guys, also just stepped onto the podium with the purple tie. He's about to start his speech. Thank you to Origenics. Back to you.
Here we go. So we just take our one last little trade here on the futures, little small guy into this one. If we break that top again, then we're going to get out. So let's wait to see what winds up happening. No big positions here at all. I'd rather react to what Powell's going to say rather than like try to predict it. Like, even though we were just talking about the predicted markets, but I wouldn't put
that's a more fun way to predict it.
Yeah. Like I'm not. Okay, here we go. The data available suggests outlook for employment and inflation unchanged. You can read it on there. But this is what I'm worried about, is the fact that he's not going to be definitive here. So let's wait to see if there's word about patience into the numbers and things like that. I think that winds up tanking the market. Not tanking, but bringing the market down. If there's any uncertainty at all in his tone or what he's saying about the future of the rate cuts. So he's just saying inflation remains somewhat elevated right now. We sort of know that. But here we go again. So,
But he didn't say goods inflation.
yeah, did he say tariff inflation? We got to bet that, remember?
No, goods inflation was 79%.
Okay.
So, like, it was supposed to be a lock that he said that. He has not yet. But remember, sometimes it's deeper into the Q&A, you never really know when he will hit on something, which is a bit of a bigger deal. So, we'll keep it up there.
Yeah, for sure.
Obviously, so you guys can see, but I'm still playing inside the range. Yeah.
All right, he's just saying that the data before the shutdown showed a firm economy. I think that's good. So we'll wait to see if there's any sort of reaction to the market to that. It doesn't, honestly, guys. The Nasdaq. You can come over to my screen right here, Andre. The Nasdaq was 0.4 when right before 2 o'clock. So right now it's 0.3. So we're not getting really anything yet. The only thing we did was short and got about 20 pennies there on that first little trade back into 120.30. Right here. Labor demand has softened, he's saying in our ear right now. So that could be a
That kind of
play.
helps future cuts a little bit.
Yeah,
That firms the December number, the December cut, I think.
Yeah, I mean, you don't want to have a super strong job market because then he won't react to that kind of a talk, right? So here we go. Obviously, there's something happening. Let's go over to Adara as the market is moving nothing.
We have commentary coming from Fed Chair Powell. He's saying that the available data suggests that the economy is expanding moderately, but that there is maybe some concerns here about labor demand. So nothing that is really super out of the ordinary. He did also say that the shutdown is going to be weighing on economic activity while it persists, but that the impact should reverse once it ends. Overall, much like a lot of Fed members, Fed Chair Powell does not seem particularly concerned about the shutdown and the resulting lack of economic data, saying that based on what they do have, things seem to be more or less in place. So interesting look here for Fed Chair Powell's speech. If we get anything else of note, I will keep you guys posted. Back to you.
2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, this inflation
but here we go.
is continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both goals of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted.
There we go. Balance of risk.
Yeah, balance of risk at this meeting to take another step toward a more neutral policy.
He's also, by the way, the Fed odds have moved in December up to 90%. So it has gone from 84% for a cut in December to 90% for December. So that is moving higher, and that should, I mean, obviously that's a little bit of a spike in the market.
There's something's happening now.
Oh, now he's
the market's cranking.
Cranking down.
Lower, yeah. So we just got a great fill. Whoa, I can't hear anything. I don't hear Powell at all. But the market is tanking. We are short the market. We are absolutely huge right now on this market. What's up, Adara?
that there's no risk-free path right now because we have inflation risk to the upside and employment risks to the downside. The Fed, though, has to take a balanced approach as the balance of risk is shifted. He says they remain well-positioned, but he also said that the reasonable base case here is tariffs effects will be short-lived here with regards to inflation. Their obligation is to ensure it doesn't become an ongoing problem. Obviously, though, the biggest thing he said here was that there's no risk-free path for policy. Back to you.
I'll take it.
And Andre, and bang! Right there as we go, man. Neil, we're short, baby. And there it goes. As soon as I heard it, man, I said to Neil, there it is. Even Neil said it. And boom, we're short right now. So now we are monstrous here. This is $1.50 in the money on the futures. So there it is, man. We take small cuts. We get what we want, man. We're sitting on these desks for reasons. And I hope you guys are trading this as well. Nice downside play right there. That's how you trade the futures. That's how you trade Powell. There it goes, man. Boom goes the dynamite. Thank you, Jerome, for that. But not happy with the market. But finally, wow, Neil. Now we are going, baby. It's $2, Neil. Let's go to the downside a little bit more, but let's hear from Adara.
Yeah, we also have Powell here saying that the December rate cut is not certain, far from it. So again, Powell saying not only is there no risk-free path, but that it's actually not even certain. No, apparently it's far from certain that we'll get a December rate cut. Back to you.
Yeah, I was able to get out at the bottom there. It looks like on iBid. I'm going to try and short the pop back in. I'm sure it takes a while for that page to update, but my guess is that it spiked to 90%. That's going to be heading right back down on those comments, almost certainly. My first thought is going to be look at the prior low and short back into the prior low because they're not going to get people. The second we heard that, I went to go try to grab more on the way back down, and I couldn't cancel bid, but who cares? We're going to continue to short the pops. Is not good for the odds of a rate cut, which my guesses are going down. My personal opinion, I still think there's a December cut, but it doesn't really matter. The market's taking the other direction, and we'll have to reassess. And remember, we have earnings after market tonight. Ooh, that CapEx spend. If you don't get that, bye-bye.
Communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, so we'll just wait to hear what those questions are. But we already, this is already quite the move, and we nailed it, basically to the wall right there. We knew exactly what we were waiting for. We talked about it. We executed on it, and there go the futures to the downside, and your boy is short. So remember, our stop was like 20 pennies, so now we're in the money $22 right there. So it's working out now. But let's go back over to Adara.
Yeah, we had Powell once again saying that the December cut is not assured when asked during the first question in the Q&A, which just started. How do you feel when people assume that these rate cuts are a conclusion? He said, well, I just said it, December rate cuts are certainly not a foregone conclusion, and people need to keep that in mind. So, again, it's been pretty hawkish over here with Chair Powell, guys. Back to you.
Just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, as a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them...
Oh yeah, I was just going to say here, again, Powell's saying, as you guys can hear, that when the two goals are at risk, it's better to be a little bit neutral. So of course that's what's happening here with regards to the Fed right now. They have a situation where we have a little bit of concerns here with inflation being too high, but then also concerns about unemployment. So it seems like they're kind of aiming to be neutral right now, or at least Fed Chair Powell is. I think that's certainly worth noting. It looks like we're going to continue to see these conflicting goals going forward for at least the next little while for the Fed here. Back to you.
Heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investments we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's a driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have a situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that it's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the US Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, you know, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and you know the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So, we get like I mentioned, what we get in the labor area, we get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches,
This part of the show is brought to you by our friends at Beta Pro by Global X Canada. Some exciting news out of Canada for the sophisticated traders on the stream. Beta Pro by Global X Canada, Canada's largest provider of leveraged inverse and inverse leveraged ETFs, has just launched 6 new triple leveraged ETFs, offering 3x bull and 3x bear exposure to the S&P TSX 60 semiconductors and on U.S. Treasuries. Even better, they're offering a special fee rebate, dropping management fees to just 65 basis points until December 31st, 2025. Plus, the U.S.-focused strategies use currency hedging, offering the potential for pure performance and exposure. So if you are a tactical, sophisticated trader looking to amplify your performance, check out betapro.ca/3x daily to learn more. Back to you.
To be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report. We didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply challenges.
Sorry, short the market right now again. We just reshorted the market.
Again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that's where we're going.
Chris.
Great, thank you. Chris Rugaber, Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles. How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. it's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Shorty, if you're watching.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility.
On IBIT, I'm short TQs. If you can hear this, I don't know.
I'm not committing. It's certainly a possibility that you would call up IBIT. We really can't see, so let's slow down.
As a follow-up in the debate on this,
Qs, Neil Long IBIT right now, just so you guys are short IBIT. Sorry, my bad. I called it up. We're short everything right now, it looks like. The market seems to be wanting to go lower. We'll let them keep talking, but I'm short again.
Yeah, there was an Amazon headline for more layoffs, I believe, for Amazon, but that's a nothing burger. I still feel like earnings are going to be a bigger deal here, but stay with the net short. We came right back, almost a VWAP on the Qs, and then the prior support on IBIT, so we went back into the short side of the trade.
So those are
he says slow down because driving in fog. That's not an analogy you want to hear.
Very, very carefully.
Exactly. Anything about this thing slowing down? We did have some nice talk about AI there, though.
Significant 3-1 companies either announcing that they are not going to be doing much higher.
Nvidia not doing anything on this news. AMD, I like the AMD break of 263, didn't happen.
That AI and what it can do.
Try to hold this short.
We're watching that.
Google was relatively strong. For anyone that's looking for strength, Alphabet
could absolutely
pretty much right back at the highs.
For job creation.
So that's at least something strong. I'm preferring the short, so I'm staying away from it. But you could certainly work over that. Maybe you could buy dips there. Again, I'm not doing that though.
It takes some time for it to.
Here we go. We're at days high for ourselves here, but
again, don't see it yet in the
just let him keep talking. He's almost over there.
On the K-shaped economy thing, I would say the same thing, or similar thing. We are if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products. but that at the top,
Bitcoin bouncing around.
higher income and wealth, and they're
I was just going to stop out here at view off.
I'm not reloading again. If we break the top while he's talking,
so we think there's something
bump
there.
that.
Come back in. Another 20 cents here on the Qs, but there it goes upside again. I feel like we want to get away from this short now. The market's not coming back in. I don't, we don't have too much left of this, so we're just going to wait for it to break 120 here, but we made good bank. We lost on one of those shorts right there on the 50-period moving average, right here. But then we got back into the short, and this is kind of nothing happening here. This was a much bigger short when he basically took the podium at 230. And then we got a little bit of questions there. We'll discuss what sent this down. Adair's making notes and everything as well. So we'll talk about all of this. But okay, here it comes back in a little bit now again. I'm going to try to hold so that at least I have something on when he leaves the podium. But for right now, it's all good. I know your short IBIT looks like that's actually not doing much, but you still got the short, which is nice. So we'll wait, but here it comes. I do have a bid at 119. So if we break below 119, we'll get that fill, and then we'll regroup it from there. So 119.02 is where I'm currently bidding, and then we'll see if we can get something. That's the 21 period, so we'll see if we can get that. And then after that, man, maybe 118 middles, but just back and forth. Like right there, we could have just got, I mean, talk about it. Like we could have just got, honestly, like 75 cents there. We didn't take it. Maybe let's put a bid there, 119.20. Here it comes.
Yeah, I mean, the charts are basically the same thing. Like, I'm shorting to 60, 63, 17, 18 or so, which one of the two I put to stop, and we're holding at 80 to 90s right now. So, like, it's like this consolidation lowers. I think we're going to make another leg to the downside. But I also saw some breakouts there for, well, almost breakouts. CoreWeave caught a pretty big strong bid there in addition to Alphabet. Don't really know specifically if it was a story or just catching a bid with the rest of the market, but relatively strong. I'm still staying short on IBIT. And let's go to Adair.
Powell making it pretty clear here that there was a lot of hawkishness on that Fed committee saying, quote, some people on the committee feel it's time to take a step back, meaning that people are, maybe considering pausing rate cuts here and waiting to see what the data gives. And once again, he's talking about weighing up the importance of inflation increasing versus unemployment being a problem as well. So again, it does seem like a balance. He also still emphasized, though, as evidenced by Fed's Myron's vote, that there are still people who are quite dovish as well, but that there are, it sounds like more than one Fed member a little bit concerned about where things progress from here, guys. Back to you.
Some of that is different forecasts, but a lot of it is also
right there at 119. So we got that exact fill that we wanted to, giving us basically, here, even we'll just do this right in front of Powell. How about that, Powell? Right now a dollar club on that one, but you can go back to him, or I don't know if the audio cuts out there when we do that.
You've been listening to from my colleagues. And so we're at a place now where we have in fact cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market. One of them is just a dramatic reduction in the supply of workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing. And then there's declining immigration, which is just a big policy change that actually began in the last accelerated now. A big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools. But others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation.
Isn't it weird,
might
like
get
some of the
2 or 3
floppy
more
stuff
tenths
is
or 4 more
pumping
tenths
the most
maybe.
right now?
But then, as all of the tariffs are in,
I don't know.
they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public...
Here we go.
Inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg
Days highs
Radio. Do you have any concerns that equity markets are
Apple the other way around.
close to being overvalued at this point?
Like, where's the logic in that?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. And you don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset
Let me cover some more
increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI, of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately...
Here for OKLO, I'm not seeing any news on this pop. A lot of talk on social media over the last couple of minutes. Seems like it could be options related as far as people are speculating, but either way, OKLO, great push to the upside, heading into the $150 level as the market oscillates. Some comments from Fed Chair Jerome Powell. Back to you.
Because there's uncertainty around inflation and the path ahead for inflation. That's why we're going, the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s,
I wanted that trade, and
these are ideas rather than companies.
Wasn't even looking.
And, so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing, and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher end consumers.
Somebody maxed a bit on Oklo heavy.
But the consumer is spending, and that's a big challenge
market again
going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much bigger part.
I'm going to hold off.
And why do you
think
the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow.
Keep an eye here on BBAI. We know Sean likes this one. Apparently being purchased by a representative in the U.S. by the name of Lisa McLean. So this representative here, member of government here, buying Big Bear AI. It looks like buyers here involved in BBAI. Notable that the volume isn't super significant, but nice pop here for Big Bear as we send you back to Sean and Neil and Pence Powell.
Some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course that will reverse. But, you still got the economy growing at a moderate pace.
Andrew.
Still looking at covers of PQs.
The Washington Post. I wanted to elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument I don't know how persuasive it will be, but there will be an argument.
Bring it. Bidding 30s.
You know, you
doesn't
slow
want to
down
give it to me.
in
All right.
when you can't see.
Sounds too bullish. I'm going to bid out a little bit more here. Cancel my 30s.
Others may argue.
Got some more out 50s there, everybody.
But you're perfectly right that you could also argue, well, things haven't.
I guess you got out of your eye bid.
You might not know that.
Oh, a while ago.
Yeah, okay. I was on back trying to
I
see what
hope CI is just a little bit better
By the
price
December
action.
meeting, we're getting, you know.
I briefly considered shorting Oklo,
but if we're going to have to do our jobs one way or the other.
I also just wanted to ask a FinReg question. I think several years ago, you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to. I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, and again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, there's no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things. You got to look to Indeed, man. Which is that, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income?
Another bit at 119 flat.
Those who might have their jobs automated? Is there a particular?
Almost got it.
You're particularly.
So we can't. Our tools don't allow us to target any demographic or any income, that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period,
that's why I get this thing at 119.01.
It benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people in the lower part of the income spectrum were getting the biggest benefits.
Almost done.
And lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. we're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number